Rated super could stop people getting home loans. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein and let's have a look at this article from the Sydney Morning Herald that was sent to me by a viewer regarding, well, concerns that rating your super could stop people's ability to get a home loan. Now, I've spoken to mortgage brokers that I know about this, and they say, nah, it's fine, it won't happen. There's not really any mechanism to check for it. We'll have to see. Maybe. I honestly think this could just be a bit of a scare tactic to keep more money under the direct control of the banks and the union-controlled super. What do you think, everyone? Let me know in the comments there. We can't have those dirty plebs controlling their own money, can they? No. We're too stupid to even control our money. They need to save for us, everyone. They need to save for us. Am I the only one that finds that so paternalistic and insulting? Tens of thousands of Australians who've rated their super under the federal government's early release scheme risk having their future loan applications rejected by the major banks. Bum, bum, bum. Oh, no. Yeah, we'll see this. We'll see. You know, if they want to lend you money and you got it, they'll find a way to make it happen. I'm not too worried. The Commonwealth Bank has instructed lenders and borrowers to ask applicants if their financial circumstances have changed as a result of the pandemic, which could include questions about whether they were eligible to access up to $20,000 of superannuation, which might have your circumstances changed. I mean, come on. What are you doing here, Turbot? What are you doing here? Of course there's going to be, your circumstances will change. They'll be asking every single person that question. I've heard stories, and these are more scary, where they'd signed the contract, where the bank said financing was everything. Then the bank rang up and said, oh, how are you going? Oh, where are you working? Oh, I'm a job keeper. And, okay, we're pulling finance. But I've signed the contract. I'll lose all this money. Oh, sorry. That's what's happening. This is all about a if, what, and maybe. If a customer accessed the funds knowing they would not meet the Australian Tax Office eligibility criteria, will generally decline the loan, a CBA spokesman said. Around 2.7 million people have so far withdrawn a total of $33.3 billion in super. Does that scream confidence? The Tax Office told a Federal Parliament committee this month that a preliminary examination have found more than 90% of applicants were eligible or clearly eligible for the scheme. However, research from analytics firm Alpha Beta, part of Accenture, and credit bureau Ilion found 4 in 10 Australians who dipped into their retirement savings under the second stage of the government's super withdrawal scheme had experienced no drop in income during the pandemic. The study analysed the depersonalised banking data of more than 10,000 Australians who withdrew superannuation after July 1. Mortgage brokers are tightening their own screening of applicants after a recent spike in declined applications for loans with the major lenders. Mortgage choice broker Rob Lees said he had dealt with plenty of aspiring homeowners who had withdrawn their super to help them meet the 5% minimum deposit. But some of these loan applications were declined because customers did not meet the early release scheme's eligibility requirements. Oh, well, then wait 6 months. Wait 6 months and see what happens. Now, it's probably better for these people to be declined now and to wait for some of the support mechanisms in the market to evaporate and then force sales to start materializing. These things don't happen overnight. The government is doing everything they can to prop up property. They're throwing the kitchen sink. They're going to the old outhouse, taking out the dunny. They're chucking that out of there. They're doing everything they can. Would you have predicted allowing people to trade while insolvent? Would you have predicted mortgage holidays? Would you have predicted rent, eviction memorandums? JobKeeper from apparently a conservative free market government? There's very little difference between the two teams now. There's very little difference. So applications were declined at some banks more so than others, he said. The argument is that you've withdrawn your super, but you weren't entitled to. You fudged it. That means there's an issue with your character. Oh no, from the banks! The banks are making character judgments. The banks are making character judgments. What a crock of bullshit, really? utter bullshit. What do you think? What do you think? The bank's making character judgments. Oh, wow. Wow. They're not saying which banks. Sharon Z, a credit manager at Home Loan Experts, said one of the first questions brokers now ask customers was whether they had accessed their super. Lenders will require the potential borrowers to explain the circumstances for super withdrawal and if the eligibility criteria were satisfactorily fulfilled, she said. The other thing to take into consideration is how much your income has been impacted, and this may have affected your borrowing capacity. I think that's the reality of it. I think the character thing, I doubt that. I think it's that people's income has been impacted and the security of their job has disappeared. Maybe they're working in an industry where it was hit. To my knowledge, some deals were declined due to the lack of satisfactory explanation, or potential borrowers weren't able to show any savings record and relying on the super funds as deposit purely. There we go. That's what it is. There was no satisfactory explanation. They couldn't really explain it. And then they had no money. Maybe they just used the super deposit. Here's the thing. How many people, when they retire, get their super money and then use it to pay off a house? Yeah, I need to find those statistics. And then, wouldn't it be smarter, less stressful, better quality of life if you had your house paid off earlier? Or if you could even use it to get into the market? The older you get, the harder it gets. The harder it gets. You need time to work, to slave away. And the government is taking money off you all the time. Remember, you have to pay the government so they can donate money to a political cause or a group overseas before you put a roof over your head, before you feed your family. You got to pay the man. Introduced in March, the early release scheme allowed those in financial trouble to make a tax-free withdrawal of up to $10,000 from their super accounts last financial year and up to another $10,000 this financial year. But there is strict eligibility criteria. You must be unemployed, have been made redundant, had working hours reduced by at least 20% since January 1, or for sole traders, seen a fall of 20% or more in turnover. Those misusing the scheme face fines of up to $12,600 and could be hit with a tax bill on the withdrawn amount. To date, no fines or notices have been issued. I mean, this would be insane if they actually did that. We're at the beginning of a recession. It is your money. It's your money. Can you imagine? Can you imagine? Heads should roll. I think, I think that'll get people protesting. I think a lot of other stuff won't. Other major lenders include ANZ, Westpac, NAB, and ING, said loan applications would continue to be assessed on a case-by-case basis. Xavier Hollenran, the director of Super Consumers Australia, said the banks were right to ask for a complete picture of your financial situation and savings. People who have accessed their super are obviously trying to meet a pretty immediate financial situation, he said. They're probably not thinking long-term on what the impact might be on refinancing or taking out a loan in the first place. So there we have it, everyone. What do you think? Did you take out your super? Were you taking out in hopes of getting a home loan? Would you rather, or were you like me back when you were saving for a deposit and you had all this money, you're sitting there in super, so pissed off that you couldn't get access to it, not even to buy a home for your family? Really frustrated me. It really, really did. But there we go. That's Australia we live in. People are I know the advantages of super, but it shouldn't be mandatory. It should be voluntary. And then the super funds would have to compete to incentivize people to give up their money. So instead of someone spending on a pack of smokes or something, or going and buying a carton, on actually saving it, there would have to then be competition. They'd have to work hard. And then I'll look at another article about how, the unions might have to, give up all the funds that they're receiving from their controlled super funds. That's fantastic there as well. Just think about that, guys. But we'll have to see. With Socialist Australia, everyone. As always, let me know your thoughts and opinions in the comments below. Did you access your super? Were you hoping to get a house loan? Or were you like that chick who used it for a boob job? All noble causes. As always, take care, like, share, subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day. I'll see you all next time.